what I'm seeing here and what I'm looking at is a combination of expectations and indicator tracking. So the Santa Claus rally that everyone's talking about and let me just make this clear, was invented by Yale Hirsch, my father, in 1972. Okay. It's in the 73 Almanac. I've got pictures of the table of contents that I posted up out there for everyone to see. He also invented the thing called the January Barometer, which is as S&P goes for January, so goes the year. We can get into the stats of that, which often gets confused with the January effect, which is small caps outperforming large caps. One of the things everyone's upset about right now. I myself would like to see small caps outperforming or at least performing and making a new high. If they don't, it's something we got to be concerned about. But I'm not overreacting like the market did yesterday to the sell-off. Yes, it was a sizable move and the biggest streak since 74, which happened to be the bottom in 74. But Santa Claus rally is an indicator. It's not a trading strategy. Yes, yeah, you can look for a positive year-end move. But if it doesn't show up, as Yale said, if Santa Claus should fail to call, bears may come to Broad and Wall. In case any of the young folk out there don't know what Broad and Wall is, that's the intersection of Broad Street and Wall Street where the New York Stock Exchange exists. But that's the beginning of our January indicator trifecta. We take which is the last 5 days of the year and the first 2 of the new year, and that's it. It's a short 7-day trading period. Years when it doesn't show up, market tends to be a little bit weaker, sometimes bear markets, but usually a time you can buy cheaper, lower prices later in the year. Then there's the first 5 days indicator, something we didn't invent, but we always featured in the Almanac for 58 years. Mm-hmm. Combined the 3 of them, we have the January indicator trifecta. When all 3 are up, the 7-day Santa Claus rally, the first 5 days of the year, full month January barometer, the market is up 90.6% of the time, the S&P, for an average gain of 17.7%, 19 out of 31 years, 29-3. Pretty solid record. When any of them are down, results are reduced. We leave it the final say to the January barometer. If the first 2 are down like they were this year, January barometer up gives you the green light to go ahead. So that's what I'm looking at. Yeah, the market's got to show itself. It's got some traits. And if not, it means that there's some other forces at play here that might take over. So we're going to be looking at that, and we'll wait for the first 5 days and a full month. But right now, we're still bullish. I'm still looking for more highs by year end. It's a little bit tougher to accomplish after the sell-off here, but at least our forecast for 2024 was gains of 15 to 25%, our best case scenario. Here we are at that still.
Perfect. Okay, so that's a ton of good stuff in there. First of all, I completely agree. You really don't want to overreact to stuff like we saw yesterday. I, too, am someone, I'm mostly positioned in small caps. So for my long-term holdings, that kind of hurt yesterday. But really proud of myself for not overreacting. I think that's excellent, excellent advice here. There is something here that I would like you to settle, if that's all right. With your father inventing this Santa Claus rally, we sometimes have discussions here about when it actually is. Can you do me a big favor and set the record straight for when the Santa Claus rally actually takes place?
It is the last 5 trading days of the year plus the first 2 trading days of the new year. That's it.
Okay.
This year it's Christmas Eve, the 24th.
Yep. 24, 26, 27, 30, and 31, and then into January.
Yes. 2nd and 3rd.
2nd and 3rd. Okay, there you go, folks. We had it. We have it officially. Officially, we have it right now. Let the debate be ended right there, Jeffrey. Really appreciate that.
It's on page 118 of the Almanac, and it's also on my blog. And I've said it at least 5 times this year. I'll say it more before the year's up.